All right. So if you have a regular Thinkorswim build, like usually when you first open it, this is kind of what you get, right? You have a bunch of widgets and stuff over here. Of course, you have your usual monitor, your trade tab with your products and different things on it. Charts tab is really the thing you're going to use the most because that has your charts all on it. Um, and so we're going to start with just kind of cleaning some things up. So as a trader, there's two things. There's one thing I really want to make sure that I always have, and it's vision. If you haven't already, I do recommend that you, I mean, you can go to like Walmart, get a little cheap, 32-inch TV if you wanted to be able to use as an additional monitor. You can even get a, monitor yourself. I remember when I first started trading, I had a 55-inch TV, and so, and a laptop, right? So I would have my laptop, and then I bought the little connector to the HDMI that made my laptop be able to, connect to my big old 55-inch, right? And I would have like my charts up like on there. Um, Anybody know why screen real estate is so important?
Visibility, you'll be able to look at different time frames.
Boom, exactly. Right. If we and also, just visibility, different time frames. You guys know that I do a lot of analysis, what I call like multi market analysis, where we'll be watching maybe ES and NASDAQ, things like that. Right, and taking signals where it's like, okay, if NASDAQ's doing this and ES does this, we're gonna go short, things like that. Well, it's like if I don't have the visibility on those things, then that's a disadvantage for me. Also, it can prevent you from what we call trading in a tunnel. Anybody know what that could be referring to?
Now, focusing on one time frame.
Yep, exactly. Right, where you're only on one time frame. For most of us as day traders, it's like the minute or the 5 minute, right? And that's all we're seeing and making decisions on, and not really being able to see the full picture of, what's going on with price action, right? Because we understand that, as above, so below. So the things that are happening on the larger time frames are affecting the smaller. Things that are affecting on smaller time frames are affecting the larger, right? So we can't, we don't want to be in a place where we're only stuck on, those lower time frames or those higher time frames only, right? We want to be in a place where we're able to take analysis from each of those time frames because there may be something on it that tells us something that we need. And so in order to do that best, there's a couple options that you have. This top right here gives you your grids, right? So you could essentially maybe do a couple of grids that way, right? So where you maybe have a 5-minute chart here, a 1-minute chart here. You could do it in the sense of like 4 grids, right? I don't know who that, I think it was Yukatora that was talking about, do you use different active traders for different sides of the market, right? If you wanted to do something like that, you would be creating like a 4 slot like this, where you have maybe 2 charts here, right, and 2 active traders here. Another tool that I'm just getting kind of more familiar with is what's called the flexible grid. This is, I mean, it's essentially the same exact thing. It's just done in a different way. So the way the flexible grid works is it'll allow you to add cells or delete cells. Well, you have to have flexible grid, and then if you go to this little, I call it the sandwich, or sorry, not the sandwich, this little grid button. And if those tabs aren't on there, you click customize grid, and it'll allow you to customize the grid kind of to your liking. Usually you can do something like this where you have 2 on the side, or sorry, 2 here, and then 2 here, right? So it'd still give you your 4 grid. And it really just depends on kind of how you want to approach your trading, right? So during this session, I'm kind of going to give you guys kind of the pointers of what you can do, and then kind of show you the way I have things set up. That way you can, you'll have the ability to decide, okay, do I want to do it, do I want to customize this kind of my own way, or do I want to kind of use algo's way. Another thing that's really important with this and that I love about this about just different grids and really Thinkorswim in general, right? So let's say I have that second monitor, right? But everything is just showing up right here. Well, if I go to the little sandwich right here, that's what I call it when it's like the little 3 lines, and I click detach. Okay, what that will do is now that that screen, I can now take and move to one of my other monitors. Does that make sense? All right, so let's say I set up a grid here, right, and I want my ES 5-minute on there, let's say. All right, my ES 1 minute, and then maybe a larger time frame on ES, right? Like a an hourly. Right, and then what does that allow me to do? Well, now, right, every I have visibility on every time frame. Right, we all know things like that 5-minute 50 moving average definitely plays a big part in the in the markets. I mean, shoot, we took a short to the 1-minute 50 during while the market was closing and made 100% on contracts, right? So it's like being able to have these different time frames is going to help you guys out a lot, because so much happens, right? Like let's look at where we closed on Friday, right? So we've had this consolidation going on, clear trend line, right? Broke the trend line, broke the upper trend line, and made it right back to the daily 50, literally almost on the spot. That's where we closed, right? So having a flex grid like this, where you have your right, your high, especially somewhere where you have your higher time frames at the least, like your 1 hour and your daily chart. So I will usually have a flex grid like this up. Now, and like I said, this is going to be on a separate monitor. So this isn't my main screen, right? But this is just going to give me some extra visibility where I want it, right? So let's say maybe I'll have the ES charts here, and then maybe I'll do NASDAQ, because I'll usually because in all reality I'll usually have my my main like 1 minute and 5-minute chart on my main screen that I'm watching, with my active trader. But we want to have the point is to have an auxiliary grid that has your extra visibility. It maybe you see a trend where it's like, hey, Apple's been holding well, so it's like I want to see if Apple shows weakness, because that'll tell me maybe that we could have weakness in SPY or SPX, right? Or another really big one that the market tends to follow on certain days, right? It's Tesla, right? So maybe it's like, all right, I want a 5-minute Tesla chart up, because if I see weakness in Tesla, that might cue me to go in my puts on SPY. So it's definitely important to make sure that you have that extra visibility just in case you need it. Does that make sense to everybody?
Yeah.
All right. Do you guys currently have something like this now?
Yes, I did something like that.
Okay, cool. Addison has. How about anybody else? Have you got anybody else on the call? You guys
Setting this up right now on my end.
he said I'm setting this up right now. Yep. And
I tried to use a quad yesterday.
Okay. Okay. Now, is this on a separate screen than the one you try and take trades on and whatnot?
No. I
Okay.
had 2 charts and 2 active traders. No.
Okay. We're gonna want to get some kind of extra screen real estate. Like I said, whether that's maybe just a little monitor, you know, a little cheapy TV, something though, that way you have this kind of outside of your you know, your usual grid. But it comes in handy just to have, like I said, that extra perspective on the markets. Like I said, I usually will have at least 2 of those running higher time frame charts on ES. And then the other 2, I'll maybe, like I said, have an Apple or a Tesla or use a NASDAQ, things like that. But you definitely want to have something like this available. Any questions about kind of why with that, with making sure you have extra screen real estate? All right,
And
cool.
yeah,
Yep, everybody's all good, sounds like. Okay, awesome. All right, so now from there, let's start to work on kind of our focus grid, right? This is going to be the place where most of the action happens, right? So we're going to pay the most attention to for our signals, things like that. And it's also going to be where we look to execute our trades and our orders and things like that. So usually on this kind of a screen, you have 2 different options, right? You do have the option to do the idea where you have 2 charts and 2 active traders. Now, because most of us are still kind of finding that edge, you know, learning the game and stuff like that when it comes to our workflow, I do actually think that is a really good idea to use 2 active traders. And so we're going to set up those active traders right now. And so I like to usually have the right as my active traders and the left as my signals. So my charts, right? So I have an ES 1 minute up here, ES 5 minute here. I want to change some of the settings in these charts because my default chart for some reason has been whacked out forever. So I'm just gonna try and get this a little cleaner. Price action, yeah, left axis, I don't need that. Scale auto, expansion area, 20% up, 20% down. Yeah, I'm just gonna take a second to do these. So expansion area on your price axis, right? Your price axis is your vertical, right? So a little expansion at the top, a little expansion at the bottom. That way your chart has space. A lot of times what'll happen, right? This chart right here doesn't have expansion. So it's like to the downside, you don't see any of your levels or anything. And then to the upside, you have a little bit of space. I like to make sure both sides have about 20% up and down. Time axis, I do like to have an expansion area to the right of my charts. If you don't have an expansion area, your chart looks like this, right? So that the most recent candle is all you see. Because I have to answer the third question of where could we potentially go, I like to have my expansion area, and then usually I'll do like 50 bars or so, right? That way I get a clean expansion area here, just so I can see, and for me, it's like my creative space of like, okay, what's gonna happen here? Let me see if there's anything else I gotta do real quick. Background black, we're good there. Equities, I like to have equities show corporate actions just so I can see earnings and stuff like that. I have definitely want to make sure it has extended hours trading session shown. And then for futures, because that's the ES is a future, so you're going to want to make sure that you do some things with that. Futures show volume graph, turn that off. Show open interest, you don't need that. Show extended hours trading, you definitely want that. and then contract change events. So in futures, right, there's usually different contracts, it's called futures for a reason. So the contracts are all in the future technically, but it's good to know when you're going to be moving into like a new contract. So I usually will have that on there and then apply. Let me make sure that's pretty much everything. Yeah, that should be it. All right. Does anybody else have any little nuances that maybe they do on their charts that they think works well? Let me know. I always like to share information because I'm not always like the most in tune with all like
Hey, I'll go.
new hacks and stuff like that. Yep.
I would also add that you just save the workspace as you go. I notice a lot of times we make some changes and we forget to save the workspace. So as you guys go forward, save each workspace every day so you can just continuously build your home space.
Boom. I like that. Now quick question. If I want to save this as my default chart, so anytime I reset to default, how would I do that? Because right now I feel like I'm losing my brain. I'm like, I know how to do this. I've done this a billion times. Why am I like losing my mind right now? Do you remember how to do that? So like this exact settings and layout for this, I want this to be my default for charts. I thought it's in this dialog box. You have a save as default, but I don't see it here.
I think it's on the setup to the right. Not the workspace, but I know what you're saying. It's on the application itself. So try application settings and see what's there. Try startup. Oh no,
that's going to be last applicant. Yeah. That's order defaults. It wouldn't be in there.
No.
But there's a way to say, there's a way to save this so that this becomes your kind of like your default chart, where any time you push reset to chart default, this is going to be added to reset all style settings and added studies to current default settings. All right, I'll figure that out while we're moving. I'll go look that up real quick. But we're gonna want to do that, right? We want kind of like it's ideal. I just want one ideal setting that anytime you right, that way anytime we start another one, right? Let's say like this ES, I should be able to turn this, click reset to chart default, and it should take, turn it to this one. Why the heck am I like, have I lost this? My brain is like not working right now. So strange. All right, let me look it up real quick. Save this chart default. Give me just a second, because I don't want to I want to make sure we have this, because it's super important to be able to save one chart as your default, kind of like your go-to, and then all the other ones will become that. Style. Wait. Oh, I think we're close. Set up. There we go. Haha. Set chart default. Okay. Cool. I'm like, I know I have this. I know I think it has to be here. Okay. Cool. Set to chart default. That's where we're gonna use. So now, just so you see that again, right here at the top, go to style, right? Because what we changed was the style of our chart. And then you go to set chart default. Do you really want to set the current chart style as default? Yes. Right. So now when we use, let's say we go into this ES chart, go to our settings, and we go to reset to chart default. Boom. Now it looks like that. That's what we wanted. Sorry, guys. My brain, it sometimes hides random information that I don't use after a while. All right, cool. So next thing we're going to want to do is make sure on your charts that you only have stuff that's relevant, right? When it comes to studies and things like that. Now you notice when you do a 4 grid, right, you have a little bit less space for things like studies, right? So you want to make sure that whatever you put on, once again, is something relevant. For me, usually, and I need to do this as well. So I'm glad we're doing this now, because I don't use any of this stuff anymore. So RSI, usually one thing I want to see on my 1 minute and my 5 minute, because of the reaction that price action tends to have with it. What was this real quick? My RSI with net. Wonder what that is. I'll look that up later. And then of course, bands. And then yeah, and that's pretty much all I've been using lately, guys. For me personally, I've really only been using RSI to make sure we, kind of where we are, and then band / price action. So what I'm going to do now is save this. Study set, bands, RSI. All right, and then I should be able to do the same thing where you go to studies. No, remove all studies. How would wait, edit studies. Boom, save as set. Okay, no, I did that already. Now will it let me, oh, it should, because this is, okay, that's what we got to do again. So then we go here, style, set chart default, because it saves any studies and any styles that you have as the default. So then we should be able to go to this bottom one, just go straight to the settings tab, reset to chart default, apply. Okay, TTM squeeze is still showing up. I want to save this as the factory default. All right, it looks like on studies might be the only thing we have to adjust. Let me know if any of you guys see that little button that'll let you. But it looks like that might be the one thing you have to do. It's just use this set. Oh, I already have a bands RSI saved. That's funny. All right, cool. So at the very least, right now, at least you have your default chart, and then hopefully you've saved a set already that has kind of the studies that you use or that you find relevant. Like I said, for me lately, I've really only been using RSI paired with the bands and price action kind of stuff that we've been doing. So it hasn't really been too complicated. Does anybody else have any questions about kind of what we've done so far?
Question. So by the time I clicked on the flexible grid, I do have four spaces I can modify, but there seems to be one massive one at the top and the other 3 are below. Is there a way to rearrange the size or resize them?
Yes. So when you're on flexible grid, okay, you click at the top right, it says show grid actions right here. You click that. Make sure customize grid is checked.
Yes.
Yep. Now, once that's the case, right, let's say, because I can do that right now. If I push this plus button that has a window to the upside of it, you see what that would do? It adds a window.
Oh.
Right. So what you want to do is get rid of that Or, right, you can do it in a couple ways, right? You can add one to the side of it, and then it would come up on the side of that big window that's at the top, and then
Gotcha.
delete one that's at the bottom, right? And then you would have your 4. Yeah, but the window with the X through it, that's your delete cell. And then if you want to add a cell, right, it'll show you, okay, it'll add a cell to the bottom, or it'll add a cell to the left.
Got it. Thank you.
Yep, no problem. Any other questions while we're setting this up? Gosh, this is racking my brain right now. I'm like, why? It should say, well, it should, once we save the set though, it should save everything with the studies, of course, so it won't be too much of an issue. But I thought there was a way to just make sure that was your default study set. Maybe I'm tripping. All right, cool. So now we have our visibility here, right? And then these two are going to be our active trader, but we're gonna get to that in a second because that's going to be its whole thing, I guess we'll say. And so for now, we can deselect customize grid, right? And once you deselect, then all those little dialog windows come off. So then your charts are, pretty much as clean as they'll get. All right, so then from there, we're gonna do some work on this left side right here. Once again, I'm a proponent of only relevant information, and none of this information right here is relevant to me making money in the markets whatsoever. So we are going to get rid of them. For each one, live news, go to your sandwich, delete gadget. Trader TV, go to the sandwich, delete gadget. Watch list, delete gadget. We will be bringing watch list back in a second, but for now, that feels good. Clear, nothing, no noise, go away. Okay. Now what we're gonna do here, we want some functionality. And so we are gonna add 2 things. So right here at the bottom, this plus sign lets you add a gadget. All those things that you saw right here are what we call gadgets. So what we're gonna do is we are gonna add 2 gadgets, and they're both gonna be watch lists. So click your plus sign, add 2 watch lists. Okay. To change a watch list, right, or to create a new watch list, go to where it says default. We're gonna click that, and then we're gonna go to new watch list. Where is that? Create watch list. Okay, we're gonna call this watch list calls. I have a bunch of watch lists saved as calls already. We've been walking people through this, so this is gonna be called exclamation point. Okay, for this one down here, we're gonna do the same thing. Click the name of it, go down to create watch list. We're gonna call this puts exclamation point. Oops, puts. All right, so now, all right, this is all that we're gonna have on our watch list. On this area, it's just calls and puts. There's legit, I mean, you guys tell me, I don't really have anything else that I want on this. Do you guys have anything else that you usually put on this? I get all my news from I only really care about the pertinent news, like what investing.com is talking about with economic calendars. You know what I mean? It's like, I don't want to see what happens with everything all through the market. None of that is doing anything for me. Anything else that you guys can add? Good. We're going to keep this simple. Nothing works, right? All right, cool. Nothing is everything. All right, so the reason why these are important is because, right, let's say I'm Addison and I'm doing my pre-market thing on SPY, right? Trying to check out, okay, pre-market, we got a range right here. All right, let me draw these levels. All right, pre-market range would have been like right there at the time or so. Falling wedge action. All right, and you're like, all right, so now I'm looking at this, right? And I'm like, all right, well, maybe I should go look at those SPY contracts and see which one I might want, right? Or which ones I might want to use. So the reason why I like having a watch list here is because that allows me to go into my options chain and do some cool stuff. Now, first off, on your options chain, there's some pertinent information that you want to make sure you have on here. And you can always change that using this options chain tab right here. Okay, you see where it says layout? You can click that and click customize. Right, but there's a couple things I always want to make sure I have on there. The mark, definitely. High and low, it just depends on how you are as a trader. For me, it's like I like seeing high and low of contracts because one, I don't want to be buying the contract when it's at a high usually. Right, I'd rather, you know, like yesterday, one of the things that made me want to go into that strangle, as I was looking at the high and low, and I'm like, bro, these things are at like low of day, right? Because everything had been moving up so much, that the puts were like at their lowest of day, and I'm like, all right, like they're really not going to recover at all. Nah, it's probably gonna be some kind of a move, right? That like it can't get slayed all day, really. Theta and delta, we all know why we use that. Volume, open interest, and then implied volatility usually shows up right here on every options chain. So that doesn't necessarily have to be on there. And so right, those are the different fields that I'll want to make sure of. Delta and theta are usually what I pay the most attention to, like you guys know. But it is nice to know, okay, is there open interest and volume in this as well, especially if you're trading other tickers and things like that. SPY and SPX usually won't have that issue too much. Any questions about setting this up?
Just want to confirm for Delta, you're focused on 0.30 and above, right?
At least point 0.10 is the farthest away from the money I can ever go. I can't be worse than 0.10. And this is usually in trading SPX, not so much SPY. SPY, anytime you're trading SPY, you shouldn't be more than a couple strikes out the money anyways. Right, so you always should have a pretty healthy delta because you're not going way over here or way over there. You know what I mean? You're usually right in the contracts that are really close to the money, maybe 2 to 3 strikes out. So with SPY, it's a little easier because you don't have to do as much digging. Now I will say this, right, that like the delta always helps you in determining the trade and the contracts that will fit your trade the best. Right, so let's say I'm looking to gain, for me, I always specify things, right? So let's say my goal is 25%, and that turns out to be, I don't know, and on this contract, right, that turns out to be about $25, right? So I know if my delta is 0.34, that as long as SPY moves $1, I would hit my 25%. Right, versus let's say I don't know, I'm doing the same thing, but I have like you see what I'm trying to say, like it helps you in when you're deciding like what your trade is going to be and like what your goal is in the trade. That's where your delta comes into play on a SPY contract. It's really just to determine, okay, if a SPY moves this much, that'll be this much in premium for me, and then I can maybe set a price target around, all right, I want I want to be out of this when SPY goes down. It doesn't even have to go down a full dollar, go down 80 cents, and that'll be enough for me to get out of here with my profit. So that's really the only reason why delta is relevant in SPY contracts. Because usually you're kind of just autopilot on SPY contracts and taking something close to the money. Now, a good rule of thumb would still be try and stick to a delta of at least 0.10. Because you'll notice that, I just want my contracts to move. Like, and this isn't the worst ever to have a 0.6 delta when the contracts are, are 10 cents, right? Because that means if SPY moves $1, this moves 50%. Right. So you can use delta as a tool when you're using SPY contracts, just kind of garner an idea of what you're looking for, or put up, your stipulations around your trade. But that's about all I would use it for SPY. SPX, entirely different story. It's very relevant when picking SPX contracts. Not so much for SPY though, because you're usually playing so close to the money anyways. Make sense? I know I repeated that like 3 or 4 times, but I want to make sure that's on good.
Yeah, thank you. And what about the theta? What do you use the theta for?
All right, somebody explain to me what theta is real quick.
Time decay.
Right, the amount of time decay to expect on your contracts. Why is that important?
Basically, it depends on the duration of your contract. It also works with the implied volatility, right? If you have, let's say, a contract expiring, let's say on Friday, and you buy the contract today, it's going to have the theta is going to be lower. So if you make a move on either direction, if you make most opposite direction, you won't be clapped that high. But if it's a 0-day expiration, the time decay is higher. So if you go the opposite direction, you get clapped really quick. But if you go the right direction, you will have enormous increase gain.
Yep, exactly. That was put very well, right? Your theta is really, if you think of theta, think of time, right? And the time you have until that contract implodes, right? 90% of all contracts expire worthless. 90% of all options contracts, right? And so theta is essentially the equation that is telling that contract, it's like the equivalent of like your, I don't know, God having your like time clock on like how long your life is, right? And the closer you get to it, right, usually, midlife crisis, stuff like that, right? Like your options contracts go through the same thing. Yes, they have midlife crisis. And so you want to make sure that your theta, and like I said, for this doesn't really apply as much for SPY. You will notice that because SPY has SPY has expirations every day, right? So you'll notice that the theta on like on these contracts that expire on Monday, right, we'll see, close to the money around 28, 34, 38, 41. Right, so let's go to the ones that expire on Wednesday. 35, 34, right? So you'll see that the theta it's not really gonna be affected as much until you're on like 0 day. But the point being is that the closer you're getting to expiration, the higher the theta becomes, right? You want low theta, you want that decay to be less as possible. And so usually, and like I said, on SPY, it doesn't make much of a difference. SPX, you at least want that theta to be negative 0.10. You don't really even get to those numbers on SPY. SPY, it's really simple. You guys just literally stay close to the money on SPY and you'll be okay, right? And if you're gonna move outside the money, make sure your delta is in a place where, okay, at least for every $1 that this moves, this gives me a good return based on what I spent on the contract, right? Right, so even if, so if I'm moving out, let's say out here, right? Okay, so for every $1 move, I'm gonna get about 20 to 25% on this contract, right? For every $1 move, I'm gonna get about 30% on this contract, about 33% on that contract, right? So it'll tell you things like that based on your delta. Your theta, you don't have to worry about too much unless you're playing 0-day contracts. And then a rule of thumb that I have, and I would recommend for you guys too, if it's past lunchtime, it's time to take the next expirations contract, unless you guys are doing, unless you're on some 0-day, craziness like I was yesterday. But those are usually very small risk. Like I'll do one contract couple contracts. You know, you don't do anything too crazy late day when theta is, you know, that high, because it can clap your contracts really quickly. So I know a lot of you guys trade SPY, and I'll continue to say it, but SPY the theta, you know, isn't going to matter as much, because usually you're taking things that are close to the money. Now, if you're in a 0 day, right, and it's towards the end of that day, theta is going to matter a whole lot. These have 2 days till expiration, right? So it's like you can't see kind of what the theta would look like on a 0 day right now. Yeah, it's not giving me the previous chain. But yeah, just know that you just stay close to the money. You'll usually be fine.
I got a quick question. I got a question.
Go ahead.
Yes. So will it be advisable to take 0 day XPX contract, SPX contracts, or we do that only on Fridays?
I do that every day.
Oh, okay.
Yeah, but you know, for me, it's like I also am very familiar with trading 0 days. You know, I consider myself a scalper. So for me, it's like the best bang for my buck is those 0 day contracts, because I don't need a lot of movement to get profit. I just need, you know, like you know, if I, you know, I do my delta calculation, and then, you know, based on that, I'll choose a contract. But usually it's not too hard to get that going in it's not too much of a difference.
Okay, but if you're taking 0 day on SPX, you take 0 day only to noon?
Ideally. And I say ideally because, right, like yesterday, it was well afternoon, right? It was we were in the last hour, last 45 minutes of the market, and I took some 0 days for 100%. So it's like, it just depends on the situation. But the key is knowing what you're doing, right? Like, not out of ignorance, right? I'm doing something out of understanding. So I understand the power of these contracts, what they can do. I understand what I'm looking for them to do, right? Versus a lot of people, you know, if you're playing 0 day contracts, it's kind of just a blind shot in the dark, you know, kind of play where it's just like, I hope this does what I want it to do, versus now I see evidence of this about to do what I need it to do. And, you know, I can take a low risk 0 day contract, because as the day goes on, right? And this is why I say, like put it this way, like if I'm in contracts going into noon, I am very scared of those contracts, right? Because after noon, that theta burn really sets in, because it's like, okay, now it's noon. All of these contracts have 3 hours to become in the money, right? And so it really starts to deteriorate the contracts after noon. So I recommend is if you're in plays before noon, then try and be right. If it's especially a day trade, try and be out of that trade on a 0 day by the time noon happens, and then maybe look to reposition. You know, you could even roll the contract to the next day if you wanted to avoid getting burned by the theta, but still maybe take advantage of the price action that's happening. So great question. So it's all really, you know, like most things in trading, it's a very subjective answer, right? Do I know what this, you know, it's like, do I know the power that this contract can have? Do I see the setup for it to become profitable, right? Do I understand the risk involved with, hey, this is a live grenade right now, and it can very quickly go the opposite direction on me. So let me make sure I have some safeguards in there, things like that. Then if that's the case, I'm usually okay with taking a 0 day past 12. But those are usually very quick trades. They're not something I'm looking to hold, you know, all throughout the day. I might see a setup or something like that. But it's something, you know, it's usually a very, like, it's not taken lightly. Like if I'm going to take a 0 day after 12, it is something that I'm very, you know, I make sure I can't clap myself on like by doing it, and that I have a strong signal that tells me that it could work in my favor. long as I got that, usually I'm okay with it. Does that answer your question?
Yes, it does. Thank you.
Sorry, guys. I think I muted myself just now. You guys hear me?
We can hear
Now
you
we
now.
can.
Now we can, yes.
All right, where did I leave off?
Asking the gentleman if he understood.
Okay, how do we do?
Yes, yes, I did. Thank you.
Yep. So it's all in. It's a very especially if I'm going to do a 0 day past 12 p.m. It has to be a very strong signal, right, or something that I see, as a huge possibility. Okay, so let's rewind again, backtrack to Addison at the beginning of the day, right, when he's looking at that pre-market range, and then wants to be able to maybe take some contracts that or keep his eye on some contracts that he may want to take once the market opens. So what we can do from this options chain, and everybody got how to set up with all the different columns. We're all good there?
Yes.
Okay, cool. Just double checking. Okay. So if you right click any contract, let's say you like the 389 calls. You can go to add SPX or SPY block, whatever this contract is, to watch list, right? He can go to that calls watch list that he just created, and look what shows up there. All right, puts, let's say he likes the 386. Same thing. Add to watch list. Puts exclamation point. Shows up right there. Now on my watch list, you can also customize your columns as well. Usually, we got to reset this up. So let's get rid of these. Symbol we need. Last we don't need. Net change we don't need. Bid and ask we don't need. All right, symbol, mark. That's the market price. We need that. Delta, we need that. Theta, we need that. It's pretty much all we need. Go to the other one, and to change that, this little gear right here is what you click. Customize. Get rid of that. Like I said, for me, everything's all about simplicity. If I don't need it to make a decision, I try not to have it anywhere in my field of vision. Right. And really all I need, if I'm going to choose that contract, right, I've already kind of done an initial, but I will maybe need to continue to see what the delta looks like on it, especially an SPX contract and the theta as well, because these contracts change in real time. Right. So delta is always changing. Theta is always changing. Market price is always changing. But usually those are the ones that I'll have on there. So pre-market, along with my analysis, like Addison would do, I would also be grabbing contracts to put into my watch list, so that when the market opens, I can keep an eye on those contracts and even potentially enter them if I see my setup that I like. Any questions with setting up or now taking a contract that you like from the chain and moving it into the watch list?
Right. Could you do that again? I didn't catch that.
Yep. So when you're on the chart or on the options chain, depending on if you have a Mac, you would do a 2-finger click. If you have a PC, it's just a right click. That creates this menu right here. Okay. You go to add, and then it's the contract name to watch list. And then you go to your watch list. This is call. So it would be the calls watch list that we made. And you see that now that 391 call for 50 cents is in that watch list. So now I can keep an eye on it right there. Let's say I like the 384, right click on it, add to watch list, puts, that's the name of this watch list, boom, show up right there, 384. Right, for SPX, now let's go into SPX real quick, because while we're at this, I want to make sure that you guys have the ability to choose your SPX contracts in a similar fashion. Once again, most of us are trying to move towards, mastery. We want to graduate from SPY into, being able to trade SPX effectively. And so I want to make sure that you guys understand the delta and theta rules in picking contracts using SPX instead of SPY. So we're going to go to our our next set of contracts, which is the 9th. Okay. And pop quiz. So on this chain, all right, let's say I'm looking right pre-market. I'm trying to maybe shop for contracts and see which ones might be the most beneficial for me. How would I do that?
On this same chain?
Yep, this exact chain. What's the farthest out with the money that I would be able to go based on my delta and my theta rules? For puts only. So we're going to look at puts.
Okay, so the farthest you're going to go is going to be 3835.
3835. 3835. That is the furthest that I could go.
Yeah.
Right. Because my delta needs to be at least 0.10, my theta at least negative 1.0. Right. So once again, when I'm, trying to decide on, okay, what contracts might be the most beneficial for me. Dang, bro, look at this, by the way. The low of this contract is $160 on Friday. The high of this contract was 3,853.
Jesus.
Yeah. Oh yeah, the power of options. Right. And so yeah, this is the farthest out that I'd be able to go. Now, like I said, usually I like to be, I don't like to be on any extreme. So it's like I don't want to be in that farthest contract unless, for some reason it worked. I decided that was the one that worked for me. But 245 delta of 0.10. So every dollar that SPX moves, this will move about $10. It's not the worst ever. I do like to try and be in like the 0.20 deltas or close to it, so somewhere in this area here. But if I'm just right, like for you guys, when you're just starting to transition into SPX, right, maybe you will go for kind of, one of those ones on the outskirts because you're not trying to tie up too much capital. It's not the worst ever, but yeah, so let's say I did that and I like this contract right here. Click it, add to, puts, right? And then there's my SPX contract. For call side, farthest out the money looks like it would be this 39.40, right? With a 0.12 delta and at least 1.0 on the theta, right? I can add that to the calls. Boom. Okay, so let's say, right, that I did this the other day, right? But let's say it's past 12 and I'm like, you know, for that trade specifically, that strangle we did, right? It was really just based on, hey, we were at the top of a trend line in a structure as well, right? So it's like we're either gonna go raise that trend line, you know, and break it and potentially go to the upside, or fail that and go back to the downside, right? So what did I do? Well, I was able to go a couple days out, right? And what do you think I did with my delta and theta rule? The same thing, right? So I looked at the delta and theta, right? That was the furthest out. And then because I knew I wanted to take a strangle that had, you know, I wanted to use a little bit less risk, right? So I went just outside the delta and theta rules because I wanted, I think, yeah, at that time it was like 2 days out. So it's like as a reference. Right, but I went just inside that delta and theta rule. So I wasn't, you know, but once again, it was a calculated move where I was like, okay, right, like I know, you know, the delta, you know, a little bit off, but I plan on trying to hold this for, you know, a little bit more extended amount of time. So the goal was, okay, as the move went in one direction or another for the calls or the puts, right, understanding that the delta would increase as that move happened, right? So then you can do things like, okay, you know, I don't want to actually be in a 0 day. I want to take, you know, the next day's contracts. Okay, I can go, the farthest I can go is 38.10, right? Or maybe I'll go a couple strikes away, right? Or maybe, right, look at this one with the volume and open interest on it, right? So I'll see where my where I could potentially go. And this is good for when you're using non-0 day contracts, right? Because as you see, the 0 day, right, 0 days, these things are delta, or sorry, the volume and open interest is usually crazy high, right? And then further days out, because SPX is so much more expensive as days go on, that a lot of times, right, you'll get in the future chains, something like this, and you have to say, okay, here's my rule for delta and theta, and then, all right, but my volume and open interest is right here at the 3,800, so I'm going to take those. Right, and this is why you want to have volume and open interest on, because if it's a non-0 day, right, even these, right, you'll see at least the volume on them is pretty hefty, right? But as you go, that's on the 9th, right? You go to the 10th, right? Nothing is over four figures almost, right? You go to the 12th, usually you'll find even less. All right, we're into the hundreds now. So it's important, right, to be able to use that delta and theta rule. And then from there, if you're, you know, picking a farther out contract, be able to say, okay, now I got my delta and theta, now where's my volume and open interest? Okay, that's right here at the 37.25. So at least this will have the liquidity necessary, you know, to move at a, you know, as the market's moving and whatnot, because there's actually volume here and people trading this contract. So this is probably the one I would go for. All right, if I was going to do the same thing to the call side, delta and theta rules, use my 0.10, right? And then I'll pay attention to that volume and open interest, not really there, but they do have at least a little bit better volume and open interest at the 40/50s, right? So maybe I'd go there instead of the 40/30s. Does that make sense? Kind of the decision-making process in that. And it's like, okay, you know, using your delta and theta to kind of just give you a map, right? Or like a threshold on your chain. And then from there, especially if, like I said, this is mainly if SPX on something that's not a 0 day contract that you're looking at, right? From there, you're definitely going to want to go through the volume and open interest, maybe find a hot spot right there that you would use. Does all that make sense?
Yeah. So
Yes.
use the delta and theta as guide, and then the final confirmation can now be how big the volume is.
If it's a 0 day, I don't really care, because 0 days are going to be usually, and this is this is Mondays, but you can even see Mondays are always volume and open interest usually going to be pretty good on all strikes. But it's once you start to, like let's say it's after 12 and you're like, all right, I want to, maybe take something that's a day or 2 days out, then yes, that's exactly how you'll do it.
Is there some sort of guide as to which day to look at?
No, not really. It really just depends on, kind of how much time you want to give the trade. And then also you have to understand that every chain, further out is going to be more expensive because it's more safe. So usually that just comes into, okay, let's say, in this structure, I don't know, maybe we spent a day making this structure. So let's say maybe I want to give it 2 days to be able to break and then pick a direction, right? So it's like, it's just based on the trade that you're looking to take that'll tell you, kind of what day to go on. But Fridays, usually I like to, like, if it's a Friday, I usually like to go for like that next Tuesday's contracts, right? If it's like a Monday, I'll try and go for like a Wednesday's contracts. Wednesday, I'll try and go for Friday contracts, right? So, and a good rule of thumb is just give it like 2 days. And you can easily go the next day. There's nothing wrong with that. But, if you're trying to take like a swing trade or a macro move or something where it's like, all right, I would look to hold this, to see something come to fruition, you got to base it on what structure you're looking at, how long it took to build that structure. And then usually you'll give it like 1.5 to 2 times as much time as it took to build the structure. So let's say on the daily, if I'm looking at a triangle that it took a week to build, right, then I would maybe look to take contracts for 2 weeks out. Right, if I'm on an hourly, right, if I see a triangle that was built on an hourly chart, I might be able to take the next day's contracts, because spent 4 hours consolidating. Okay, let me give it 8 hours to break out and continue. So that's kind of the rule of thumb there, is however much time the structure is, give it about 1.5 to 2 times that amount of time on your contracts. And that's a great swing trading rule as well for those that do like to swing trade, or like the trade idea signals that we have, right? Most of the time those are created on macro time frames. And so, it's like, okay, this has been in a structure for a week. All right, let's take the contracts for the end of the month, right? For 120, because knowing that it's going to maybe take 2 weeks to start to get some movement, breaking out in the direction or whatever. So does that make sense?
Oh yeah, thank you.
No problem. Yep, you always want to give it. Yeah, and that's just, I've noticed that it's the best. It's kind of, yeah, and it's funny because I learned it through training people to do sales. And it was like, however long you think it'll take you to learn it, right? It would take you to learn it, give them like 2 times as much time to learn it. That way, one, you're not setting an expectation that's improper. And then 2, it's just, it's like I said, it's a proper expectation. Hey, if it took this long to consolidate, let me, chances are it'll take that long or longer to break out and come to fruition. Questions?
Yeah.
All right, cool. Sounds like we're all good. All right, so now we're gonna get into the fun part. I mean, hopefully you guys have been having fun this whole time. But there's some pretty nice capabilities that I like to use once I have my setup good, right? Look how clean this is, first of all. Like, boop, boop, and then boop, right? Like, I don't know. To me, I like things just When I'm trading, I like things clean. I like things simple. I only want to see what's relevant. Anything else like is not of my concern. And I feel like this does a very good job of that. All right, so now we're gonna do a couple things. For one, we need to turn this gadget into active trader. So if you go to the cell, the sandwich on the cell, and go to gadget, right now it's on a chart. We're gonna wanna turn that into active trader. Click the menu, gadget, active trader. Do the same thing for the bottom one, menu, gadget, active trader. All right, next up, we're gonna want to link our watch list to our active traders. And I'll show you guys why this is awesome in a second. So in order to do that, we're gonna wanna pick a link for this watch list. So if you go to symbol link, which is this chain link. Now, if for some reason you don't have it, sometimes that's because your cell right here is too narrow. So you may need to widen it out so that that link comes up. Once it's there though, you can click it, and then let's call it 8. We're gonna make our calls brown. We're gonna make our puts lilac. Number 9. Okay, so now I'm gonna go here and do the same thing. Once again, if for any reason the link is not there, sometimes it just means you need to widen the cell, and then it should show up. We're gonna turn that to 8 brown. We're gonna turn this to 9 lilac. All right, now sometimes if this shows up where it's like it tries to give you a chart, what you're gonna wanna do is on this cell right here, if these show up, C is for chart. So what it's saying is it has AT, active trader, and chart in this cell. We don't want a chart in this cell, just click C. So deselect it, and then just active trader shows up. Same here, right when we tied that to 9, a chart came up. We're gonna wanna deselect the chart and make sure active trader is the only one selected. Now, if for any reason you don't have this dialog box show up right here, you can click your symbol actions, the menu, go to gadget, and let's say if chart was selected, you can turn that into active trader, and then gadget. Oh, you still have to deselect the chart. Okay, so this is gonna make you deselect the chart from there, but that's all good. All right, now this is one thing I really like about this, right? So I understand that, right? The top cell is my calls, bottom cell is my puts. Okay, so let's say, right, Addison, ding, 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 bell opened, and he's getting a signal. That's like, oh, okay, looks like we're gonna break to the upside of this range, right? I don't know, just, yeah, as an example. Right, well, let's still, and we already have the contracts that we like. Let's say he's like, okay, I like this 39.40 contract. When you push it, because these two cells are linked, now whatever contract I have selected here is right here. Maybe it's the puts. I don't know. We're getting a signal to go short. Maybe there's a break of this structure right here. Okay. I want my puts. I've already have my puts set up. Now it's time to take some action. Just gonna click my put. Could I click? And you see the name of it, the 38.35. All right, this is your 38.35 put. All right, let's go to maybe, maybe it's the SPY contract. So you'll see it change with any contract I have selected. It'll change. Does that make sense? You guys see how this might be handy? Okay, cool. So we're gonna spend some time setting up our active trader now to get these looking the way they need to with the information we need on them. All right, so let's go through it. So the way active trader works, so there's gonna be some default buttons here. We're gonna change some of these and then go into it. So by market, I use this button pretty much all the time. This is how I get in any contract. I don't limit into positions. Usually I'm just gonna buy market. Why? Because for me, you know, I'm expecting the move to happen. And so I don't want to fumble around a lot with like trying to you know where I'm going here, like limit into and get like whatever price I'm trying to get into like super correct. Like it just doesn't work all the time. You know what I mean? And the money I lose not taking a signal is much more than the money I lose by getting filled by a difference of like 10 or 20 bucks or something like that. Does that make sense?
Yeah. Yeah.
Okay. So that's your buy market button. Give me just a second, guys. Half a second. All right, cool. So next up is sell market. Sell market is my least favorite way to get out of my trades, but it works. Right? Why? Because there's another way I like to get out, but we'll go into that in a second. Cancel, it's good to have there. Reverse, don't need that. Flatten, we don't need that. We're going to replace that flatten button with a button called flatten now. Okay, we're going to drag that back up to the top dialog area. Okay, so this flatten now button is very similar to the sell market button, but I like it a little bit more because it will get you out at market without any dialog boxes or anything popping up. So let me show you what I mean with that. So, so usually if you go to sell market, it's going to have you, right, it's going to bring up dialog box and tell you like, are you sure you want to do this? Blah, 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 blah. Right. If you click flatten now, no dialog box, no nothing, get you out of the contract at market. Okay, so I like to have this button handy because once again, fumbling around dialog boxes, I told you I wanted to be out of it, and now I have to reconfirm with you that I want to be out of it. Like all of that time is money, right? Those seconds can be the difference between like 50 points in premium sometimes, like something crazy, right? And so I like the flatten now button because it allows me to get out at market, no dialog box, no ifs, ands, or buts. I said I want out, get me out. Is anybody else familiar with this button, or is this the first time you're introduced to it?
This is my first time.
Yeah, my first time.
I
Cool.
heard
This
about it, but
button-
I had forgotten about it.
This button alone just made whatever you paid for your subscription. Guaranteed. Only, like I said, because it allows you to be so fluid with your exit. And for us, that's super important. So flatten now, one of my favorite buttons. All right, we're gonna go back to the settings because there's another button we want to add too. Anybody know which one?
Sell at ask.
Boom. Sell
Sell
it.
ask. Okay, yeah.
Yep. Why is that button important? Somebody tell me.
You sell for a higher price?
Yep. The ask will always be higher than the bid. That is the way the market works. Right. And so if I can, right, if I'm ever going to put an order to sell at, why not have it at the ask? Right. As a seller, ideal seller, do I want to sell for more or for less?
I'm gonna sell for more.
I want to sell for more. Right. And so this button is very, very handy in giving you the ability to sell for more. Okay, now the caveat with this button is that it will only fill you while the move is still happening in your favor. All right, because I'm joining the ask and now my limit order is going to be essentially higher, right? This is the market price right here at 75, right? You see where when you highlight join the ask, right, put your ask or put your limit order to sell at whatever the ask is at that time. Okay, the reason why contracts go up is because the ask goes up. So people want to sell for more, right? And then the people that want to buy that want to buy for or have to buy it for more, right? So that's your ask increasing, and then and that happens during a move in your favor, right? And so that's why we're always looking for wow, it's so pretty, yummy, right? Go ask your tablet. Yay. I don't know. Hey, eat your donuts. Right, so that's the caveat with this button. Right now, it's really nice for especially like band players and stuff like that. That's what we call ourselves, band players, right? Because we can see where the most ideal time to join the ask is usually, right? Usually that's going to be on the approach of one of your bands or one of your profit targets, right? So let's say I took the trade, I don't know, I took this, the break of this structure here, right? We saw a kind of a falling wedge, and let's say I was just trying to take that, right? And I took that entry. Right. Well, if I push join the ask here, I'd probably be selling for what people got filled at here. Right. Now, if I waited to click join the ask until this rejection candle started forming, I would not be getting filled, because is anybody convinced it's continuing to go up when it's going down? No. So usually I have a less likelihood of getting filled join the ask on there. Right. We pop back up. As we're starting to make this move, if I click join the ask, probably get filled. If I wait for the candle to become a doji, probably not going to get filled. Why? Because once again, we need the move happening at that moment in our favor. All right, so let's see this igniting move here, right? We're starting to come up on our trend line and the band, right? This is where I'm looking to sell the ask. Why? Because I know usually red band means we're going to do, right? We could potentially do some retracing back into the band or consolidate, right? During consolidation, am I really going to get a sell the ask? Probably not. When we're breaking the consolidation, am I going to get a sell the ask? Probably. So does that make sense? But you have to be, right? So a lot of times, right, I'll try and join the ask. If I don't get filled, I'll flatten out. Join the ask, don't get filled, flatten out. Join the ask, don't get filled, flatten out.
How's your stop loss different from flatten now, or the flatten now over stop loss?
Flatten now will sell you at whatever the market price is at that moment. Stop loss is a limit order meant to if it reaches a certain price.
Okay. Oh.
So does flatten now sell the contract?
Yeah, flatten now will get you out of a position. Yes, at any time for market. So if you, let's say you're a mental stop person, right? Because let's be real, right? And you're like, all right, if it gets to this level, I'm gonna get out. Gets to that level, click flatten now. Ask no questions. So in a sense, yes, it can be used as like an eject them. Anytime you want out, flatten now. Whether that's moves going against me. Oh, I said, hey, if it goes over this level, and I said, once we close back inside the red band, I'm out. Any of those kind of moves, flatten now, right? Join the ask will only work if the move is happening, or the price action is happening in your favor at that exact moment. So, right, sometimes it won't be the case, but I still want to get out and maybe take profit, flatten out.
So what would be the difference between flatten out and sell market?
A dialogue box that asks you if you're sure you want to do it. Okay, so for me, the time that dialogue box takes to come up for me to navigate my mouse to click yes or send, and for that order to go through is a very, very valuable amount of time that I do not want to be, that I don't want to lose. And so in order to do that effectively, flatten now, because that has no dialog box, no moving my cursor around to find the button, and no clicking the button, which can, like I said, that those seconds can cost me money.
So I have a question. Is that similar to the auto send button?
No, auto send button is very dangerous, because now is there certain things I want to confirm, certain things I don't. Exits are usually one of those things I don't want to confirm. Entry, I mean, I'm okay with like boom, pushing send, because sometimes, you know, most of the time I want to make sure that like I got the right contract or whatever. But once I'm in and things are moving, I need to move quick. So yes, you can use the auto send button, right? But if you're a newer trader and you're just now kind of figuring the ins and outs of active trader out and really getting familiar, the worst thing I can do is give myself like, you know, take the training wheels off, because that could open me up to mistakes. And so the reason why I'm not recommending you guys put on auto send until you're very familiar with with your workflow, getting into the contract, right? Watching the profit go up, whatever that might be, selling market, or joining the ask, right? Getting real familiar with joining the ask. So I'm getting out, selling into levels, selling into the move while it's for me instead of waiting for it to be against me, right? That's a skill set, right? So I'd recommend you guys don't use auto send until you've been, bathed in the fire of active trader for a while.
Okay, thanks.
But yes, in theory, eventually, yes, ideally you'd be getting to the place where you can keep auto send on, and then you don't have to deal with any dialog boxes at all. Good question though. Any others? Going once, going twice.
Sold.
I had a feeling there was one out there in the ether. Don't know what it was. ahead.
I'll go. I do have a question. Is there some way to default for the quantity?
Yep, I'm gonna get to that right now. We're gonna get to all these buttons down here. All right, at first we were just working on these top buttons. Any other questions? I thought I heard a gentleman. Maybe I'm tripping. Okay, cool. So next up, we're gonna go to this little arrow right here, show buttons area. All right, and that's gonna open up a whole extra layer of buttons for us. First of all, yes, the quantity is usually in like the hundreds and random stuff like that. You're like, I'm not grabbing that many contracts, bro. You're gonna want to go to setup, top right, application settings. Okay, from there, we're gonna go to order defaults, and then we're gonna go to options. Okay, now usually the default quantity is set to like 10 or something like that. Move that to 1. Order quantity increments 1, maximum quantity of orders. Yeah, you can do 20 or whatever. Default order type, market, default stop type based on the market price as well. Apply settings, and that should make it look like this. Let me know if that worked for you real quick. It shouldn't take too long. Yep, right, top right, setup, application setting, order defaults at the top in the middle, and then options is the tab you want, and then mainly it's just default quantity. Set that to 1, increment set to 1. As long as both those are at 1, you'll get something like this instead of that big numbers that show up by default.
Thanks.
No problem. All right, so now what this is going to do, right, is it allows us to specify our quantity that we want to be interacting with. There's one more thing I want to do down here, and then we'll get into kind of some of the funner things about active trader. But I like to make sure that my a couple things are on here. So what I'll do is go to customize. Oh, actually, it's not even right here. This is actually something new, but this down here is what I want, this customize button. Okay, volume, buy orders, don't need sell orders, don't need price, bid size, ask size. Volume, you don't really need. I mean, so volume's tricky. Like sometimes it's good. What volume allows you to do is it shows up right here in like these blue bars. But sometimes it's nice to see where there is a lot of volume, right? So let's say I'm in this contract and I see that there's a lot of selling volume right here where people are going to get out of this contract here, right? So I might look to maybe get out of that contract by there, but it's not something I really use. So for now, we're just going to take that off, and then P&L open. Right, so this is essentially really all you need, right? You want to bid size and ask size, you just kind of can't get rid of those. Also, if you ever need to, right, let's say I'm trying to place a limit order, right? I can click right here where all this is right here, and I can put that in. Right, let's say I want to do a limit order to sell right here. Let's say I'm in this contract and I want to sell at 80, right? It's nice to be able to just click that, and then I can put a sell order in right there for my contracts. So that part is nice about having these buttons right here, the buy and the sell. Those will let you place limit order, right? Let's say you want to put a trail buy in even, right? You can use this and, maybe like, all right, I want to buy it if it hits 78, right? And then it's 7 because you have this, you click this and you put an order there at 78, it'll fill you. And then P&L open, that's just going to tell you exactly how much money you've made with the contracts that you have open currently. So I like to simplify things once again, even on my active trader. I don't need a bunch of stuff on there. I need to be able to customize where I want to place orders when I want to do it that way. Also, when you're in a trade, your bracket orders and things like that will show up. So it'll show you where your stop loss is and where your profit target is, and then where the price is currently. So it's nice to have these ask and bid size here, and then P&L, so I can see how much money I've gained or lost on the open position that I currently have. Any questions around this?
You talked about setting a trail stop. Did you sort of skimmed over that?
I haven't touched, we haven't gone into placing orders yet. This is just giving you overview of using this specifically. Yeah, so we'll go into that in just a second. It's funny, you keep asking the question that I'm gonna like answer in the next segment. Funny. So yes, we'll go into trail stops. Is that pretty much what you wanted?
Yes, this is very exciting because this is where I'm just clueless at, and I've been waiting to understand this. Thanks.
Yeah, I got you. Thanks for being here. Right, so this is just kind of bare bones of like how to use this dialog box. And once again, anytime I have information on my screen, it better be relevant or else it's not going to be there. Right, so this is kind of the relevant stuff that you need, right? Current price of those contracts that I'm in, and you'll see the price, the market price will always move in this gray color. And then you'll see, right, where the asks are and where the bids are. And then of course, now one thing about this dialog box, this right here is the last price that this went for. This is not the market price. A lot of people use active trader and they say, oh, well, active trader doesn't, it's slow. It doesn't go with the price of the option. This is not the price of the option. This is last, not mark. Mark is the current market price. Last is the last price that contract was bought or sold at. Big difference. So this is also why I like to have mark here, right? And then your market price will also be here. It will not be here. That confuses a lot of people. So make sure you guys know that. Okay. So if you ever want to, you can like zoom out of this dialog box here, right? So sometimes your right, sometimes when I'm looking to place orders, maybe I feel things are like too close, right? I can pull this out. It'll consolidate the prices. So let's say I want to put my sell order, right? If I was here, I don't really have I can't see a sell order at 1, right? And sometimes when you have your orders in, you know, you're going to have like a sell order up here and a stop loss down here. So it's nice to be able to zoom out, and then if I ever need to, and then maybe place make sure an order's there or adjust an order, anything like that. You can, when you're in these trades, you can move your stop loss as long as it's a regular stop. You can move it with this dialog box as well. And you know, your profit target, let's say, you can move that as well. Usually you would only be moving your stop loss up as you're in more profit, right? So let's say 75 goes to 100. Maybe I'll move that stop loss to 75 or 80. All right, so now let's get into the fun stuff that you can do with this. This is what I love the most about Active Trader, is the templates. And so what we're gonna do is we're gonna go to this template tag. We're just gonna click it real quick. We're just gonna go to trigger with bracket. Okay, now you could just use it, right? It was on single, and what is that doing? Well, that's just a single order, right? Which means I would buy, and then nothing's on there, no stop losses, no profit targets, no anything. I'm just kind of eyeballing and then looking to sell market, join the ask, flatten out to get out. That's not a very effective way to trade, especially while you're learning, because what's the problem with not having a stop loss?
You can't control your, go ahead.
Oh, go ahead, continue.
No stop loss is you're not managing risk.
Okay, poor risk management. What else?
Is it that you'll get out at any price and won't be at the price that you like?
Right, I am at the will of the markets, which is a very ruthless. It doesn't really, it does not care about the rent you have to pay or the Christmas presents that you wanted to get. Right. Also, right, lacks discipline. So it's, you know, it's not a sustainable habit, because that which you don't track, you cannot manage. Right. And so, you know, in the game of I have to make more money than I lose, to not predetermine what losing is, right, leaves you at the will of that whole position being gone, going to zero. That could be $100. That could be $1,000. Could be $10,000. Trust me, I've seen it all. $20,000, $50,000. Right, a lot of people talk about their 25Ks. Like I've seen like those. I've seen those get wiped out in minutes in the market because people don't have stop losses or don't choose to control what they're willing to give the market if the market is right. All right, market is always right. Market goes up, market goes down. Where's the market going to go? Up or down? right? There's no, you know what I mean? So it's like a lot of people, the market's always right. The market went up, it was right. The market went down, it was right. All right. The issue is a lot of times we have a hard time with being, with wanting to be right instead of letting the market be right. Right. I try and create a way of trading where I'm always in alignment with the markets, which means I'm always right. I'm either right, it went up, right, and I went long, or I'm right, it went, and this is by it, I mean the cost of my contract, right, went down, and I got out at a price that at the price that I specified I wanted to be out, if that was the case, right? Because the market's going to be right either way. It's going to go up or it's going to go down, right? That contract's going to either move for me or it's going to move against me. All right, so let me prepare. Hey, if it moves for me, what does that look like? What does that feel like? What's that, where am I taking profit? If it goes against me, what does that look like? What does that feel like? And where am I taking my loss? All right, we have to think about this stuff, because if we don't, we're subject to the markets deciding it, and the market does not care. The market will take all of it. No remorse, no sympathy. No, let me holler at you on the side real quick. None of it. No questions asked. And so you have to protect yourself from, or you have to you just have to partner with the markets like that. Market's going to give you market's going to give you money, market's going to take money. Right? The question is, am I losing more than I can bear? Am I losing more than my account can bear? Right? Because when I get into places like that, I'm starting to risk my longevity in the market. And the markets is a place where you have to pay to play. So you never risk your longevity. Right? How do I do that? I got to protect myself. How do I protect myself? Got to have a stop loss of some kind on entry. Do you guys cringe when I said that?
A little bit.
But I gotta let it breathe though. But I gotta, bro, all of it just slaps you. Stop it. Just a justification to clap yourself. Put the damn stop loss on. So we're gonna go to bracket order, trigger with bracket. Okay. What that's gonna do in my active trader, everything I need to be successful, right? Which is the right contract, profit target, and a stop loss. It's all right here. I got the right contract. I chose that myself. Right now, I get to work on the dynamics of what this play means for me. Okay. Now, this is something that you guys are gonna have to spend the time in and really understanding. But the good thing is you guys have already been introduced to the delta rule. Right. So you guys already know kind of what to expect from your contract by entering it. All right. The second I know, okay, I'm buying this $200 contract as a 0.12 delta. All right. My goal's what, 20, let's say 20%. So it's 20% of 200. Let's say 25%, make it easy. Sorry. I mean, either one was easy, but just waiting for the answer. 25% of 200.
40?
$50. Okay. So if I know I have a delta of 0.12, I'm looking to get $50 per contract out of this trade, let's say. Okay, so what would my limit order want to be at? Plus 0.48. Why? Because $200 contract, I need $50 per contract out of this trade, and it has a delta of 0.12. So 12, 24, 36, 48. I need SPX to move 4 points and give me 0.48 premium per contract. Okay.
Can you explain that again?
Okay. So the reason why we have the delta rule, right, is because it now allows us to quantify what we're doing. Okay. Everybody has this arbitrary bullshit that they start with when they're learning how to trade, right? What does that mean? Well, it's like you pretty much turn your money into casino chips or credit cards, where it's like it's not tangible money. So you don't feel like it's actually real. And the market does this on purpose. That's the reason why they went away from like little pink slips that you submit and shit, right? Because they now get to dictate kind of the value of it, right? Which for most of us is like something I'm willing to just throw. And I threw some money in there, just threw some money out there. I just took a couple contracts. I just figured I'd play it, see what happened. Just like you did at the casino with the chips, right? It's like you did on the credit card, because you're like, I don't see it. I don't see it. It's just, pay the bill later. Right? And so the market does that and tries, right? And that's what most of us learn how to trade. Like that's how it kind of we were brought into it. We didn't even know it, but it was like it changed your psychology, and all of a sudden you weren't trading with your money anymore that you needed to, pay bills and stuff with. You're like, no, this is money I can just throw. It like they convert it in your brain for some reason, right? And so what I make an effort to do is I want to convert this back to, no, this is real, tangible earth money, right? And understanding that tends to help me with my trading and keeping my mentality right while I'm trading. And so, oh shoot, we got 20 minutes before next class. I realized that goes fast. So what this allows me to do now is I convert this into a very meticulous approach, where it's like literally whatever I'm looking for in the markets, I specify, and that is my order. And so let's say for most of us, we have this, I'm 25%. Okay, so let's say you're a 25%er, right? And you're like, I'm just looking for 25%. Well, most of us, if I asked you what's 25% of that, like most of us haven't even thought of what 25% actually is on this contract. Right? What I employ you to do with your delta is do the calculation of what 25% is or would be. Right? So if I'm getting a contract for contracts for $200 and I'm looking for 25%, that means I need a $50 increase per contract. I need $50 in premium per contract. Okay, I can do the equation and know what $50 in premium per contract is, right? I could, even if I wanted to, just put a freaking 0.50 there. And that will give me, when these contracts go up $50, it will, that's my limit order to get out. Okay, what I like for you guys to do though, is actually look at your delta, right? Quantify what this looks like. Okay, to get that 50 cents in delta at a 0.12 delta, SPX has to move how many points if delta is per dollar, right? As it is, right? The equation for delta is how much this contract moves per dollar that the stock moves. So delta, this contract's gonna move $12 per dollar that SPX moves. So how many points do I need SPX to move for my contract to hit my profit target? This delta times the amount of points you need. You need 50 points, right? I got a 0.2 delta, a 0.12. You need 0.50. How many points have to move?
Is that 2 points?
4.
4. Okay.
Right? How do we know? Because it's a 0.2 delta. So if SPX moves 1 point, that's 0.12. SPX moves 2 points, 0.24. All right, so now I have $25. This contract would have gone up about $24. right? 3 points would give me 36. 4 points would give me 48, right? So I would need about 4 points on this contract for it to increase the 50 cents that I need for my 25%.
When you say points, what do you mean? Like, how do you see points?
Dollars.
Oh, okay.
Yep. I need SPX to move this many dollars, right? And because I understand my delta equation, right? My delta equation, right? And this is important, right? Let's say for even your for like SPY, right? Like my delta equation is what matters. That lets me make this play real now, right? Let's say I'm looking at a trade, right? I'm looking, for potential upswing or something like that. I know what I want out of this, right? 25% on my trade, right? And then let's go with let's use a different one. Let's try and use let's use this. Let's say we were going to go put side, right? The 384 puts, right? So they have a market of 50 cents pretty much. They're going to cost you $50 and a delta of 0.20, right? Which means every dollar that SPY moves, this contract will move $20, right? And, for most of us, once again, we have that 25% rule where usually we're like, okay, I'm going to make 25% on this. Okay. How much does SPY need to move for you to make 25% of this $50 you're going to pay? So 25% of 50 is what? A little bit over 15, 16? Oh, I'm sorry. About 12, 24, about 12. So how many points would SPY need to move for this to give me 25% at 0.20 delta? I'm paying 50 cents for the contract. About 50 cents. Right? Because this is a 0.20 delta, which means for SPY, if SPY moves $1, this contract will move 20 cents, or in essence, $20. Right? I'm going to buy the contract for 46. Okay, 12, 24, 36, 48. Right? Which means that if SPY moved about $1, this would give me about 10 cents in delta, right? Because if it moved 50 cents, this would give me about 10 cents in delta. Because if it moves $1, this is going to give me 20 cents in delta. Right? So I need SPY to move 50 cents to give me the 25% that I want on this contract. All right. And the reason why I'm putting you guys through this exercise is because you have to know if your contract is in alignment with the play that you have ready to go. Right? We do this too many times in such arbitrary ways that we don't really understand the science behind it. Right? Part of manifesting something is being able to actually visualize it, to actually see the cogs working of how this is going to play out. Visualization is a very powerful tool, right? And also it keeps us in alignment with what we're actually looking to do. So yes, I put people through the ringer when it comes to understanding what they're actually doing and how what they're doing here or in their brain of I want to make money actually equates to making money and what will be made based on what you're given. Right? In this case, any contract can tell us exactly what we need to happen in the stock for the contract to reach our goals. Contracts come in very different forms and fashions. Every single one has a different delta theta, blah, 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 right? So I have to make sure that contract is in alignment with the goal that I have for the trade, or else one of the two is off, right? How do I do that? Well, I start to dig a little deeper into how this manifesting is actually going to play out, right? And that'll help me determine, is this a contract that is in the goals that I have, that's set in the goals that I have. If so, I can move forward with it. But I want to make sure that you guys start making this really tangible, right? Because we could easily go to this percentage and just put 20% here. And hey, when it gets out, get me out at 20%. Limit order, sell me at 20%. Right? But most of us have been doing that, but it's, you know what I mean? And it ain't working for one reason or another. Right? Well, let's take it a little bit, one step further. So this plus and minus right here, value offset. This is real dollars, right? We understand that our decimal points move for for options, right? Because everything, like I said, they converted it on you to make it feel like it's not real. This is 205. It's not $205. That could go to something else in life, like a nice dinner, something. Right? It's just 205, put contract, right? So what I do is I want us to convert this back to real money, back to what this really is, right? Okay, so if I'm going to take this $200 contract, looking for 25%, 200, $50, right? 50 cents. Boom, 0.50. All right, is this in alignment with that though? How many points does this have to move to give me 0.50? Well, my delta is 0.12, 12, 24, 36. All right, it would take 4 points on SPX. All right, well, I'm expecting this to go from 93 to 97 because that's right where we are. So, all right, we might be able to get that 4 points. Now, remember, as the move is going for you, your delta is increasing. Okay, so that's why I like this. I like taking this a step further and doing it based on the number that I see here. Because as the move's going for me, that just means it's going to hit faster, right? But I got to make sure contract's in alignment with what I'm looking for here, right? I might be in a contract that says, damn, this would have to move 20 points up for me to get to my goal that I have on this trade. That is not a good contract for me to be in. I need to go find a contract that has a better delta that might give me that in this many points instead of that many. Does that make sense? I know we've been spending a lot of time on this.
Yeah, it's for the right reasons, because once you understand the maths behind it, then it will confirm the decisions we're making before we actually get into the trade.
Boom, right? The worst thing ever is doing shit based on ignorance, not knowing, the most horrible feeling ever, right? And a lot of us don't understand, right, that kind of next layer of what we're actually doing, right? And so take it to a place now. And like I said, for me, I'm big on manifesting, right? I'm big on visualization. I'm big on, right, like planning the play and playing the plan, right? And, this is a huge gap that a lot of people have, right? And like I said, for us, it's about being in agreement with the markets, right? It's about being partnered with the markets. This is the best way that I can partner with the markets and make sure that partnership, right? Because the market they'll give you any contract you want, right? Market's like, I don't care, you take it, yep. Here you go. Okay, we'll shake on it, right? Market don't give none, right? So we have to be the ones that kind of, I guess you could say, look at the fine print of that contract, make sure it's in alignment and in agreement with the goals that we have for partnering with the market. And so this is a really good way of doing that. On the flip side, a lot of you guys are like, man, I put my stop loss in and it kicks me out immediately. Once again, a percentage, a lot of times, is so like the market moves too crazy for percentages. Right? It just does, right? So I like to use value offset. Also, when I'm thinking about my risk, I don't want to have a fairy tale pipe dream of what that risk is. I want to make sure it's a real reality. And it's something that I actually can accommodate for and consider and take and decide this is worthwhile for me, right? So in the sense of, right, a lot of people will start with like a 25-25, right? It's like, all right, I'm willing to lose about 25% on this contract, look for 25% gain. Like, not, one-to-one, it is what it is. It's a great way to start in trading the markets, right? Is get good at 1-to-1 or less, like, because then it's that consistency, you're kind of building an edge out, right? And then once you have that edge built out, you can start to see the terms of when it's like, okay, I might be able to hold this, or, you know, things like that. But, right, but I want you guys to quantify this as well. Okay, if I can only lose 25% of this, right? That's $50, right? Or let's say I want to lose less. Let's say I can only lose $40 per contract. Maybe you bought a few of them, right? You're planning on buying a few of them, and you're like, okay, so the most I can lose on this is $40 per contract. Okay, how many points can you afford SPX to go down when you enter this trade? How many dollars? I'm sorry if it helps you frame it. How many dollars can you afford SPX to go down in this trade? I can only lose $40 on this $200 contract, and I have a 0.12 delta.
3.
Boom, right? Because that's about 36, right? That would be 36 dollars in premium, right? Or cents in delta, like it's telling you, right? They converted it on us, bro. We even know it. They have us thinking about these things in these, like, right, very minuscule kind of nonchalant ways, when they're actually pretty pertinent to everything that we're looking to accomplish, right? The money is everything, like literally, we're in the markets, right? And so, yeah, I can afford for about 3 points to pull back, right? So maybe I'm looking at this structure and I'm like, okay, you know, if I would take this entry maybe on seeing the yellow band support and hoping we can go from yellow to red again, right? And I'm like, okay, if I take this contract here, right, at 90, let's say 93, right, trigger number would probably be somewhere right here at the top of this structure, 94, right? Which means I know that 91 is going to be where this would stop me out at, right? And then that would be minus 0.40 in premium would get me out of this. All right, so for each contract of 200, if those contracts lose 40 cents in premium, I'm out. Those contracts gain 50 cents in premium, I'm out. And it's all right there. The stop loss can be adjusted, right? So as you're in profit, you'll see a bracket come up here, and you can literally move the bracket itself. So this is gonna, yeah, because I can't do it right here. But usually what shows up once you're in a trade, okay, let's say we took this 230 contract, or this contract for 230, we're expecting 50 cents in profit. So it'll show up with a line kind of dialog box right here where your sell order is, right? And then it'll pull up with one at 180 as well. So it'll be a little bracket like this. All right, so once I'm in this trade at the market price right here, and this order itself is put in, right, it would have this, it gives you this bracket, right? What we created here is a bracket order, right? Why? Because it has both your entry and a bracket of a sell order for your stop and a sell order for your profit, right? So in between your market order already placed, right, is going to be those two safeguards for you if the play does not go your way and if it does. Now on that bracket, there's a little, there's like a little doohickey that sits on it, like right here. And you can use your cursor, grab that, and adjust your stops as the play. Let's say the play is going for you, but you don't want to get it out at 280. Okay, well, you can move this, let's say up one, right? So you move this to your break even, right? So it's like, now I grab this, I pull it up so that this bottom line, which was right here, moves to where my break even, or where I entered at. Right, so now, boom, I'm protected in this trade. I don't have to worry about anything, right? Like, I'm already in profit, and my stop loss is right at break even, so that if price action does move back, or this contract, you know, this market's been wacky as hell, right? I can at least be out at break even or at cost. Yes, and it will also pop up on the chart at a specific level as well. So once you place that, you'll see on the chart, you'll see the same kind of thing where you'll have the red lines that show you where it'll say limit order in like a little box right here, and then another one for your stop loss, let's say. And you can adjust that on your chart. As long as it's a regular stop, you can adjust it on your chart or grab it and adjust it on this in the template right here. So looks like we're gonna have to do some continuation on this next week, just to fill in a couple holes. But overall, we got through pretty much everything. The last thing you'll want to be able to do is this right here, is how you save. All right, so I can click this dialog box, save this, let's say as plus 50 minus 40. I can save that. Now, another side note, if you're using these dialog boxes for getting into swing trades or anything like that, you're going to want to make sure time in force is GTC, or good till canceled. Right? If you're this time in force or TIF is on day, then these orders will go away at the end of the day. Right? So if I'm using this for swing trades or anything where I plan on holding past the day, I got to make sure this is GTC so that it's good till canceled. Next time we go in, we'll go into trail stops and things like that. But essentially, a trail stop would just, there's no real big difference, except it's now going to follow every 40 cents. It's going to move the stop loss up. So if you place this order with a trail stop in, then you would see, let's say 230, so around the 205 area or something where your stop loss would be. But when 230 got to 270, it would move your stop loss up to 240 from 200. Why? Because it's following at a 40-cent increment. All right, so let's say this goes from 80 to the 310. Right, then your stop loss would move up another 40 cents. So 240 to 280. And it follows or trails the order. But I usually will do that. I do everything based on exacts, right? So I don't do any percentages here. I'm usually going to look to have the exact, amount of premium that I'm looking to get per contract. Based on whatever setup I see. All right, I'm like, all right, we got a downward flag. I'm trying to go test back at the high of day. High of day is four points away. All right, I'm looking for 25%. All right, that's going to give me 25% of this in 4 points. That's the contract I want. So take the trade. Make sense? I know we had to kind of fly through the last part of this, but we're going to get back on advanced in a couple minutes. So we can, I guess any questions you guys have after this, we can just move it into the next one. But I'd honestly rather keep this in basics. So we can address next week and then go into advanced coming up, if that's all right with y'all. Any questions right now though, before we wrap this up?
None right now.
Yes. Huge, thank you.
And by the way, like if you guys haven't seen, I have a crazy amount of saved templates. Why? Because it's like I've just tried, I've tried different things. A lot of what I've tried, was with percentages a lot, and then that's when I've converted now to using actual premium instead of percentages. All right, cool. Well, we got our advanced class about to start. If you guys don't mind, let me we'll start our advanced class at 2:45. So we'll give ourselves like 10, 15 minutes real quick just to, and I'll post the link up, but refresh, get some water. I'm like, I need some water. My throat is dry. All right, but I'll see most of you guys in just a second. And this was recorded, so I'll have this up pretty soon, and then we'll get it in on advance. Want to go through a couple things in there. All right, I'll talk to you guys in a second.
All right.